Hey, what's up guys? John here. Wall Street is sitting on a whopping $110 billion getting ready to deploy into single family rentals in 2023. $110 billion. Now you have to ask yourself, why would that be? I'm going to tell you. It's a couple things. The first is you're seeing rising interest rates. In rising interest rates, you're going to price a lot of people out of the ability to buy homes. They're not going to qualify. The second is inflationary concerns. The fiat dollar is going to go through hell and back over the next 10 years, and they know this. They want to deploy this money now into hard real assets and essentially turn these renters into employees. Well, let me explain why. If you own a rental house, if you own a single family home, you own an apartment building, and you own this property, it's like owning a business, and every single person that lives inside of that structure works for you. And right now, if you're looking at the cost of living in America, they're essentially able to deploy depreciating fiat currency into hard real assets and turn everybody into employees. And that's essentially what's going to be happening. The third reason is that if you look at the general consensus with single family, with the middle class Americans, what's happening? Affordability crisis, small business getting crushed, big problems coming. There's going to be likely a lot of liquidations with secondary homes, even primary residence. A lot of inventory is going to come up on the market. They're positioning themselves for this massive wealth transfer. I'm going to walk you through exactly what's going on, what you should be doing to prepare for this. Please hit the like button. When you hit the like button, YouTube's going to share this content, educate more people about what's really going on behind the scenes. And if you need help fixing your credit, you want to invest in distressed real estate, we would love to give you a free consultation at GreatCreditFast.com. That's GreatCreditFast.com. Give us a call at 561-430-5900 for that free consultation. If you decide to work with us, we'll get to work for you now, and we won't charge you until after the new year. So if you'd like to fix your credit, you want to start off 2023 with great credit, you want to position yourself to invest in distressed real estate, GreatCreditFast.com, 561-430-5900. Take a look at this. Wall Street has $110 billion for home buying spree. Wall Street has amassed a considerable war chest to take advantage of this shifting housing market. Institutional investors have earmarked $110 billion to purchase or build single-family rentals. Insider reported. The estimate comes from Zelman & Associates, which hailed the amount as the most ever accumulated by investors to acquire single-family homes. Of the $110 billion, $30 billion has already been committed to properties being leased or developed. The money is enough for 400,000 single-family homes. Institutional investors already own 700,000. That is only 3% of the nation's 20 million single-family rentals, according to Roofstock, but MetLife Investment Management predicts it will grow to 40%. So 40% of 20 million is 8 million homes. They're saying that they currently have 400,000. So they're going to go from 400,000 homes to 8 million homes over the next 7 years. You think about what that actually looks like. As we start to see this market shift, we're going to see family offices. We're going to start to see insurance groups, conglomerates, all deploying a lot of their money to these private equity firms to buy these single family rentals. That's what's ultimately going to be happening. That's a huge jump from 3% to 40% in 8 years, 7 years. The players, and what's fascinating, it's not just these private equity firms. Look at Elon. Elon Musk said he sold Tesla stock to free up cash in a worst case scenario. If a worst case scenario strikes, right? They're all sitting on mountains of money for a reason, right? This is going to be huge. This wealth transfer we're going to witness is going to be massive. The players gearing up for a home buying spree in the $4.4 trillion single-family rental market run against the gamut. Includes major names, Invitation Homes, Tricon Residential, Blackstone, KKR among them, as the wealth managers and pension funds such as CalPERS and Invesco. Investors are looking for a better bet than their traditional property holdings, including office buildings, which are struggling in addition to single-family rentals. They have been drawn to multifamily buildings and industrial assets. Well, now, of course, industrial, because you look at the e-com boom. Industrial, what is industrial really? It's a huge plot of land with a structure on it, right? They're able to go buy this, industrial plot of land, 3 acres, 4 acres, 5 acres, and they put this structure on it, and they're able to yield immense returns on this structure. Because if you look at like a traditional everyday mall, they might buy, let's say, this t-shirt or something else like this plant here, and it might take a week or 2 weeks to sell it, right? And so they are paying every single day that they have to store it. But with this industrial, they're able to get products in and out multiple times per day, right? So they're able to command a huge yield on these industrial properties. And then on top of that, we're looking at what's going on in office. They're going to be going just beyond aggressive over the next couple of years. They're going to go aggressive in industrial, which is going to have an impact. They're going to be going aggressive with conversions of office buildings into residential. They're going to go aggressive with buying single family homes. They're just going to be going all in on real estate, I believe, all in on real estate. Institutions pumped $50 billion into single-family rentals during the first 2 years of the pandemic. John Burns Real Estate Consulting estimated, but the market has shifted in recent months, and rising mortgage rates sideline not only individuals but institutions. Well, this $50 billion that they pumped in built out a false sense of security for a lot of Americans that went out there and invested in real estate, because there's so many big players that were running out there. Zillow, iBuyer, all these different platforms were stepping up, investing so much money. A lot of lenders, a lot of people were just, they had to get into the game, right? So they were relaxing lending conditions. It was really like a free-for-all. It was an ideal time to be a house flipper, no doubt about it. But now that's all changing. Single-family rental transaction volume was down 70% year over year through November, according to an estimate by Adam Stern, CEO of Strata Single Family Rental. The housing market is presenting an opportunity for investors, though, as many individuals want to live in houses but don't want to buy at the moment because prices and mortgage rates have jumped, or they expect to move in the near future. Prices could decline in 2023 as more homes are listed for sale. They could decline in 2023. They're sitting on $110 billion. They're sitting on $110 billion, not because they could. I mean, these are some of the brightest minds inside of the investment world. I think they're just sitting on there like, oh, maybe things will go down. No, they look at the data. They look at the data. We're stepping into this affordability crisis. 30% in October, 30% of all small businesses were unable to pay their office rent. In November, it was 41%. You look at record high credit card debt. You look at the rising borrowing cost. You look at what's going on right now in just office space. If you look at what's going on in office, this is one of the biggest phenomenons that no one's talking about. So much money was pumped into office over the last few years. And if you look at where office is today, and you look at the incomes of these office buildings versus what they bought them for 2, 3, 4, 5 years ago compared to where they are today, these investors, these owners of these properties are not going to be able to get the refinance if they only have 30% or 20% equity. And maybe they put 30% down or 40% down back then, but rentals, or the rental revenue dived by 30% or 40%. So because vacancies are skyrocketing. So what's ultimately going to happen? They're not going to be able to get the refinances. And so it just positions everything for Wall Street. Positions everything for Wall Street to be able to dive in and buy distressed real estate across everything from office to malls to single families. It's just going to be like a free-for-all for investors over the next year. So when they say, prices could decline, no, they're sitting on this mountain of money because they know prices will definitely 100% decline. Investors are also working with builders on build-to-rent communities, allowing investors to score deals and builders to ease inventory crunches. Well, I mean, builders are set up for failure because they sold this narrative of housing shortage. It's a catastrophe. We need to build. And then builders are like, hey, sky-high prices. Mortgage rates are 2.5%, 3%, 3.25%. Right now, people can afford it. And then they now have 1.5 to 1.7 million homes under construction. They go from 3% interest rates to 6.5%, 7%. And rates are still probably going to continue to rise. And so all of these communities basically were just built for pennies on the dollar that are just going to get handed over to KKR, Blackstone, a lot of these big players, CalPERS, all these companies and pools of capital are just going to be sitting on all this money. And it's perfect because they're going to be able to pick up all these deals for them. Perfect for them, by the way. They're going to be able to pick up all these deals for, a fraction of the cost. And so when we look at this and we just Elon Musk selling $40 billion in stock over 12 months. 12 months, $40 billion in stock, right? A lot of people say that's for Twitter. But you look at Zuckerberg selling stock every single day in 2021. Right? You look at all these big players, Bill Gates, you look at all these Bezos, all of them are just selling, sitting on mountains of money. And I believe that it's all for a reason. It's all coming in 2023. All the pain that we've kind of went through in Q3, Q4 of 2022 is kind of, nothing really. It's like practice, right? The big game is coming up in 2023, 2024. And if you intend to invest, if you have a goal and you're like, you know what, maybe I'm working at this job I don't really like, maybe I'm renting an apartment I don't really care for. If you're really trying to invest, you're really trying to make a lot of money, the area that you should be looking at right now is going to be these 2 to 4 unit properties. And why I say this and why I think this is the best place for everyone to be looking right now. If you're a single, if you're a single person, maybe if you have kids and a husband or a wife, it might be a little bit more challenging. But if you're a single person, why you want to do this is for a couple reasons. A lot of these properties, 20.5 million housing units. I know there's a little over 20 million houses, but actual housing units, 20.5 million housing units are owned by mom and pop investors, and many of these mom and pop investors are small business owners, right? And so small business owners are going through a lot of problems right now. They're going to start to sell these properties. So if you're able to use the net operating income of these rentals, it will help you qualify to purchase. You might not have the income from your job, but with this income from the building and your job income could help you qualify to buy one of these properties. You could move into one of these units, collect cash flow from the adjacent units. It will offset your living costs, and it will put you in a position to own something. And then maybe you can start a side business, start a new business, start a side hustle while you're working the job that you're not that crazy about, but at least you step into a property that's producing some revenue, and you can then work on that side business. Once it scales up a little bit, then you can go full time, right? There's a lot of opportunity for the smart and savvy investor, the entrepreneur in 2023. If you need help fixing your credit, we'd love to be a part of that success at GreatCreditFast.com. Give us a call at 561-430-5900. Drop your comments below on this entire situation. Where do you see this going? $110 billion in capital just getting ready to deploy. I think the timing is perfect for them. LinkedIn, Twitter, Instagram, TikTok for short form content, and catch you guys in the next video.